biggest advertising group, WPP, has lowered its growth forecast for the third time this year. Well, let's speak to its founder and Chief Executive, Sir Martin Sorrell, who is in New York. Martin, good to see you. Now, WPP, is this its worst year for a decade?
Due to listening to boulangeries and bookies, yes.
Boulangeries and well, we're a broad church on this show, Martin, as you know. I mean,
very broad, Ian, very broad, yeah.
What's to blame for this downturn in ad spending?
Well, we're seeing a lot of pressure. The question is, Ian, frankly, where is it coming from? Is it coming from Facebook and Google? I think the answer is no, because we invest, our media division invests very heavily in Google and Facebook to the tune of about $7 billion a year, and it's probably our number one and number three media destination for investment. So it's not that. Is it because consultants are eating our lunch in terms of digital consulting activities? We think no. If you look at the record for the first 9 months of the year in terms of our competition against them, we do pretty well. We win on a 2-to-1 basis, and by value probably even stronger than that, about 4-to-1. So it doesn't appear to be that. It could be that consultants are going to our clients, to the CEOs of clients, and saying, you're spending too much generally, not just on marketing, but generally. Reduce your cost and we'll get paid on a percentage of what we save. I think that's part of it. And last but not least, and probably and the most important point, these pools of capital in a low interest cost environment built around activist investors or zero-based budgeting companies such as 3G, such as Reckitt Benckiser or Coty, are putting a lot of pressure, particularly on packaged goods companies, to cut their costs. And their reaction is to cut their variable marketing costs. We think it's an investment, not a cost, but the fact of life is there's a tremendous amount of pressure, particularly in the packaged goods sector, which accounts for about a third of our revenues.
Yeah, that's right. As you say, the likes of Unilever, Nestle, all under immense pressure right now from activist investors.
Right.
Do you see that moving away anytime soon, that pressure?
Well, it depends on what happens to interest rates. You're probably as much of an expert as anybody on this, and you probably would agree that interest rates over time will probably rise. But will they go back to where they were pre-Lehman, that's pre-2008? Probably not so. The world we face is a low-growth world, 3 to 4% growth, low inflation, limited pricing power, and therefore clients are focused very much on cost. So in that environment, we have to revamp our offer. We have to make it much more integrated for our clients, so it's seamless, that we're managing one P&L instead of a multiplicity, and we're focused very much on efficiency, as well as better work, effective work. Secondly, focus on the fast growth markets, the Asian, the Latin American, the African, Middle Eastern, the Central Eastern European markets, because that's where the next billion consumers will come. And then last but not least, digital and data. Digital is already 40% of our business against a worldwide weighting of about 30%. It probably will permeate everything we do, and there's still significant growth there. And last but not least, data is about 25% of our business, and linking data to our offer is critically important. So those four things, integration or horizontality as we call it, fast growth markets, digital and data, are key to our future.
Martin, we're very short on time here, but I just want to ask you, you've said in the past that companies like Google and Facebook are not just social media platforms, they're media companies and should be treated as such.
Yes.
Do you think they should be regulated
Yes.
like media companies? I mean, if we allow false news, fake news on our channel, we're told off by the regulator. Should they be similarly regulated?
Well, you're raising a very big emotional issue, particularly from where you sit, Ian, and what you represent. But having crossed that Rubicon, I would say I have not much of a truck for Steve Bannon. But before he left the White House, what he did say is Google and Facebook are utilities, and they should be regulated as such. We've seen in the EU already some regulation. I think there are 2 more decisions to come down from the Director General Vestager. So I think this whole issue of regulation of these very powerful, technologically based platforms, not just like, it's the fearsome 5, Ian. It's Apple and Amazon and Facebook and Google, all of them, plus the 2 Chinese fearsome 5, make it fearsome 7, the 7 sisters, I guess, of this modern day.
I'm afraid.
Alibaba and Tencent are also powerful too.
There they are.